Okay, traders, welcome to Trade the Structure. We're just coming to the start of the Asian market session and another day in the US. Now, they didn't do too bad overnight, so we're just going to review the different levels and the key levels we're looking at. Like I said, they didn't do too bad. They had a late rally into the markets, which actually wiped off quite a lot of the losses. So they were staring down the barrel of quite some big losses there. We look at the S&P, you can see that late rally there, probably the last hour or so. The Dow was the big one. I mean, you can see that rallied about 400, nearly 500 points, so 1.5% or so off the low into the close, which really minimised those losses. And the actual Nasdaq, I think it actually flushed the Nasdaq into gains for the session. So that was a 2.13% rally. You can see off those lows. I expect that that's more to do with some short-term intraday selling. Shorters just closing out positions into the close, and the algos taking advantage of that move and just exacerbating that move up. Okay, so that's pretty much what I was looking for there. You've got a major level down here, which we've been speaking about for a few days now, just this extension level. So if you can see that from the charts there, you've got the first leg down, a bit of a bounce on the Nasdaq, and that secondary leg down, it's really extended into that volatility projection, which is just equal sort of a move down. Now, as I'm always saying, you can't just say, okay, we'll start buying here. You need to see some sort of confirmation, and potentially that sort of rally into the close was the start of some sort of buying, starting to soak up the selling pressure, or the recent selling pressure. You can see the momentum on the Nasdaq is starting to ease back down where it bounced before. You can see it's bounced there previously and then made new lows. We could do the same thing. We might bounce again, make a lower high, and continue on down into new lows as the momentum starting to ease its way back up. So up until we see sort of a higher low to work from, I think the Nasdaq is still well and truly in a downtrend. And same with the Dow. I would expect the Dow to potentially press a little bit lower. Okay, maybe finding some love just prior to that level, but sort of down towards that 3,800 level. It's another 1,000 points down where it could extend to. Okay, and that's the same sort of scenario. We've got that first leg down, good, decent bounce in the secondary leg down. All right, we go over to Europe now. I'll make it short and sharp today. This is the DAX. Now the DAX sort of found some nice little support. We'll just get rid of some of these lines here. Nice little support off this zone through here. Okay, which is somewhere around. We've got it around, say, 13,500. Okay, bounced up there, so it was quite positive on the open, where I thought it might have been a bit more negative than what it was. Okay, so we actually bounced, but we're coming into this key level through here, around 13,840 or thereabouts, which is just extended, sort of closed this gap here, so we could, just roll over from here. I think this is quite a good move up. So you'd be looking still for, if we start to fade into this level, around say 13.6. Fade into that level and start to find some buying again, I think there's going to be a deeper correction up. Okay, and you're starting to, look to, let's get rid of this here. We're starting to look for levels up like that. You start to look back to, these sort of areas up here, potentially right back into 14,100 thereabouts. Okay, if we get a decent correction back up. Okay, for now, the trend is still down. The major trend is down, even though it's not a massive sell-off like it was previously. It's more controlled, and that leads me to believe we could be starting to find a base here, a bit of a pop. That doesn't mean we can't roll over really hard again down the track. Okay, over to the Ftse. Now the Ftse looking to me a bit more bearish. We were talking about this level prior, had a bit of a failure off this level, which was last night. Big sell-off, okay, on the open, which you'd expect on the open, bit of a sell-off considering the European markets had to sort of play catch-up with the US negativity from the prior session. Okay, so a bit of a sell-off, and then basically after the open, it started to bounce. Okay, so we bounced back up. Now there's no reason why we can't just, maybe flush up and hold a lower high here and start to take out these lows around 71.58. So it's all about the open. I suspect that the US wants to, bargain hunters want to press in, but until I see some sort of high-low workout in the US, I wouldn't be diving in too quick because there has been a controlled move down. Now, a controlled move down could be that they're edging down, favoring, closing out positions, your major players closing out hedge positions or fund positions or whatever, and edging across into bonds because inflation is still quite high. It means that yields are either going to go higher or they're going to remain more attractive where they are at the moment. So you might get major flows of funds across there, which means pressure into equities, and that could be why it's controlled. Or they've got it wrong and they're edging lower before they have another ramp up again. Okay, but until we see that recent momentum change to the downside, then we're sticking with our bias down. Okay, over to the Asian markets. We'll look at the XJO. Now they're breaking down. There's got a major level here at 69.70, which it broke into the close yesterday. Now, with the action from last night, we might find that it bounces back again. It's looking to only open down slightly from where it was, which could mean that we have a bit of a flush of the lows. You can see this previous low from what was it, the 10th of May, flush of low and sort of bounce back. Or I would expect, we have a bit of a bounce back and we start to hold a lower height. We're going to drift lower into the close. Being a Friday too might be a bit of concern, but generally that is in a major downtrend. And I thought if we're going to hold this level, we should have probably held yesterday. We shouldn't have closed below it. So I'm sort of feeling that we could be targeting. Let's just draw that. Actually, let's just draw it here. We could be targeting this low here. Okay, it's somewhere into 67.47, which is a couple of hundred points lower. But I think until the US starts to roll over, we're going to be okay for now. Over the Hang Seng. Now, Hang Seng, I'll get rid of some of these moves. The Hang Seng's rolling over. It's had this move down. It got smashed. Okay, and it got beaten down prior as well. Actually, this was the move. This was a big move down, I think more due to Evergrande. Big unwind, had a bit of a bounce back, and then we had another unwind back down to sort of that 1978. Had a bit of a bounce. It found some resistance at 21,250 thereabouts, and we're heading down again. So whether this is going to hold and continue its way down through these lows at 19,198 and start to attack this area, this zone through here, we just have to wait and see. But generally the pressure is down, momentum's down, even on the 30-minute chart. The daily is definitely down. The 30-minute is starting to roll. It's just, you've got to watch out for those flushes on the Hang Seng. It tends to flush around on the open, chop around, and then start to pick a direction. Okay, so that's what we'll be watching for. Continued pressure starts to break through these lows from yesterday at 19,341. Then you're starting to target into 19,182 and potentially below that. Okay, under the Nikkei, pretty much the same. It broke a level through here on the open, pushed up, retested the highs at around 26,018, and then not retested the highs, but retested a level we got marked in, which is previous lows, and then started to head south. So we could extend on these lows today quite easily. I think the market's going to be, until the US bounces, it's going to be sort of stuck in this downtrend, okay, and pushing lower. We'll just have to wait and see how it opens, whether it could ramp up off these lows. It might flush the lows and ramp up because it's got a habit of rallying on the open just to squeeze out some shorts and then drifting lower again. Okay, and when the US heads lower, the futures are pressing it lower. It opens weak the next session and starts to ramp up again as we get these bargain hunters. So it is finding it a bit of some momentum on the upside. You can see here flushed, ramped, flushed, ramped. We'll see if we can do that again. We sort of test into these lows potentially and then ramp up again, potentially back up through 26,038. But generally that trend is still down like the rest of the markets. Dollar index, over to some currencies. The dollar index just powered higher yesterday. I've got the anchor to the uptrend around that 104.33. You can see just through here, whether it's just going to grind its way down, reset and go back up, or have a bit of a shallow retracement back up. But either way, there's been some rebalancing into the US dollar, okay, after these inflation figures come out a lot stronger than expected, and everyone's sort of sitting there going, okay, the numbers are showing inflation's a key problem and it's not easing. If anything, it's accelerating. Now, the Fed have got to pull their finger out and start to raise rates a bit harder. But the problem is they said they're going to be aggressive, but they're not. I mean, 50 basis points is probably not too aggressive considering where inflation is. So they're trying to keep inflation high and not cool it too much, which could really crash these markets. But at the moment, the markets are very tentative. Putting on risk is kind of off the table at the moment. We're going to get these bounces back up in equity markets, but like I said, trend is down. You're going to get these soaking up, probably grind up, and then fail. Okay, up until the US starts to do something with inflation. Now, if they start to raise too hard, obviously the US dollar is going to drop. If the US dollar is quite happy with what they do, but if they do that, it may really start to cool this equity market. So it's a bit of a fine line the Fed's balancing at the moment. But with the US dollar, it's heading higher. I don't expect that to change too much because the trend is your friend. They're going to keep pushing it higher. They're into clear skies at the moment. They've got through this daily resistance zone around 103.50 even. It's sort of powered. It's sort of consolidated there, powered up. So it's coming out of that zone. It's pressuring higher. So it could just keep chopping higher. It's like the yen. Everyone thought that was the world's biggest short. The US yen, the world's biggest short. It just kept powering higher, powering higher. There was that, which we'll talk in a minute, the 130 mark. They just kept testing. So this US dollar could start to, really get a bit of a move onto the upside. Who knows? Or whether they start to, find a new level and consolidate sideways again. But until the Fed does something, a bit harder with rate rises, I don't expect this US dollar to come off just yet. Euro broke down a key support level. You can see this zone through here we're talking about for quite a while. With that US dollar rally, just went bang, took out all stops below. Whether this is enough, we've got this yellow zone here. If we go back to a daily, is a daily zone, okay, daily support zone. You can see right through there. So even though it's dropped, if you're looking at short term, yeah, you've got a nice sell in your hands, but just be wary that you're in a key daily support area. And if this US dollar does drop, the Fed starts talking up rate rises a bit harder and faster than what the market's expecting, US dollar will fall and the euro will rally, okay? And just a massive short squeeze could be on your hands. All right, so just be wary of what levels you're looking at and what zones you're in. Okay, back to the 30-minute chart. Look at the pound. The pound has found some selling. Just started to find a bit of a base through here. We've got some serious selling as well. Probably look at the daily as well to see where we're at there. We're into this area at 122.45. We could easily just extend. We've got a cluster through here. We've got some more lows at around 120.80 and then a few more lows to contend with. You can see the levels there, 120.80, was it 120 even. So it could easily just sort of grind its way down there up until the US dollar does something. Now, if the US dollar continues to tick higher, the pound will continue to, you expect, to tick lower and potentially just targeting these areas down there. Now, the Aussie dollar on the daily, we're starting to get through, we've got through that 70 cent mark and it's still pressing lower. Okay, you've got this little zone through here, 68.09 or 68 even, which is just trading into, it's just testing into. Whether it goes a bit lower and you start to look down to, looking left, start looking down into this area here, 66, 65, we just have to wait and see. But on that daily trend, it's extended. We are getting extended, but that extension hasn't shown any sign of pulling back just yet. It's still moving down. Okay, so the bias is down even on the 30-minute chart. We've got the bias down. We start to get a bit of easing just into that level where you could see it did bounce of 68.32, but the trend is still down. Momentum is still down. It could be looking to hold a lower high and continue down. Like anything, if the US dollar doesn't fall over, then the Aussie probably just continue to drive lower. Okay, US yen. Now this has been a good one because the US dollar is heading higher, and as the US dollar was heading higher, here you've got US yen heading higher, US dollar heading higher, US yen heading higher. Now the US dollar has broken to new levels. On the upside, the US yen has fallen over. You've got a major double top here. What I think it's more due to is an unwind of yen short positions because of more safe haven buying. So it's more of a safe haven bid into the yen than the US dollar falling or the US dollar doing anything. And we know that because the US dollar is heading higher, US yen's heading low, which means the only thing it's offsetting that US dollar strength is the yen strength and more safe haven buying. So it could trigger a major short squeeze into the yen, which would mean major short squeeze, yen head higher, and this pair head lower. Okay, over to gold, copping a bit of a beating. You can see it's broken down. What we've got, you've got to go back timeframes. When the levels start to fail to hold, you've got to ask yourself why. We've got a major retest fail up here. We saw a double top, whatever you want to call it, around that 2066, 2070 area. Okay. And we've got this lower high in place. We're looking at this, move down, pop back up, extension level, and we're looking down sort of into this zone here. Now, it's broken that rising support. It could easily find a bit of a bid through this zone here at around 1782, which is not going to be, it's not going to be liked by the bulls and your gold bugs and all that. And everyone was talking up inflation hedge. It's just not doing that. Safe haven, it's not doing it either. You're seeing a safe haven bid into the yen. You see even potentially a bit of a safe haven bid into the US dollar as well, but you're not seeing that into gold at all. It's continuing to head lower. So it's just acting as a currency at the moment. So the US dollar is going up, gold's going down. Okay, so all you really can do is stick with your bias. Bias down at the moment. Potentially we're just flushing some of these levels. We've potentially just flushed through this, what was it, 1843. And this is kind of that extension level I was looking for. We'll go back to the 30-minute chart. That extension level here, it's targeted that. So whether we got this flush here, we're going to start to bounce from here and retest back into 1846, we'll have to wait and see. So I wouldn't be buying it here. I'd rather be buying it when we get a push back above a level of some sort, or back up here and a failed bid to push lower. Potentially, this is what I was looking at prior to that breakdown, but we could be looking something like this. okay, at that stage, you still buy a short. If we start to press back up like that, okay, then you can change. It's a big flush of a major level. We've got a higher low on the play, and then I think it's going to turn around and squeeze out some of these sellers. But until it does that, bias is down. Oil. Oil has pushed up. You've still got the problems with Russia and Europe and the energy crisis in Europe, which is holding the prices down. Holding oil up at the moment. We've got massive inventories come out a lot stronger than expected in the US, which should have really, with extra supply, should have pressured oil down, but it's not. But the problem is it's not really getting a run onto the upside because of what's happening between Russia and Europe. Okay, so it's pressing into this 107. I feel that the momentum's starting to fade up into that level, so we could get a bit of a spike into that level, and then we might see some profit taking or a bit of a squeeze on some of these longs for a move back down again. But until we get that, again, the bias is up. It's been held at around this 102.77 area. Copper's moving down with the US dollar rally, and you can see it got a bit of a sell-off, bouncing back at the moment, but we're still sort of between this level at 1,412.50 and bouncing off a major level. If we go back to the daily charts, bouncing off this major level, which we spoke about, I think, yesterday. Okay, so I would expect it to keep testing into that level until that US dollar change its tact. Okay, whether it starts to, US dollar heads high, you keep pressing down into this, into that major level, see if it can hold. Just testing. If the US dollar starts to roll over, we should start to see a bid back into copper. Now, we'll finish off on some cryptos. Now, cryptos got poleaxed. We're talking about this 30,000 level. The question is now is whether we're going to continue to roll over or we're going to start to find a bit of a bid, retest back into 30. We'll have to go back down to this 30-minute chart. Actually, we'll stick on the daily for now. Bitcoin, it was a major level. Now, when you've got a major level that's completely obvious to everyone, expect it to be tested and broken because you know that there's going to be stops below there. And if you're trying to buy it, do not buy until you see those stops flushed. Because right now we're in the position we don't know whether it's going to just be a stop flush, or we're going to bounce back above 30,000 and start to rally higher, or whether we're going to test back into 30,000 from below and roll over from there. Okay, so the last thing you want to do is put a bid in there and find out you're on the wrong side and you're not using stops. I mean, a lot of people who do that don't use a stop, or we would put in a bid there, come into 30,000, go straight through, takes you out. Okay, and then you turn out to be right, and it does rally. You want to see the price action build something like this, a higher low, but potentially back above that 30,000 mark from here. Okay, until we do that, the bias is still down and the pressure could be on. Don't forget there could be a massive margin unwind into this market, which could trigger across the board. And maybe it's been triggered, maybe not. If we look at Ethereum, and I think maybe that spike down in Bitcoin was triggered by that, that flush into 1745 on Ethereum. Okay, they both went together. So it was a massive flush in the Asian session when the Asian session was coming out the fire, but the US actually bounced back quite high, which is probably seeing a bid back into these cryptos. At the moment, for me, Ethereum is in the middle of nowhere. Okay, it's in between levels 1745. It's rejected that level and 2255. Now, if we go down to the 30-minute charts to see what they look like, okay, we could be starting to find a bid just in a higher low, which we could be just working. You can see that rejection in there, good retracement, comes back down. If we start to hold this inside level, you can see that sort of bid through there at around 1865. We could work our way back up the test into that those highs around 2230, which would be pretty good for Bitcoin. It could mean that Bitcoin is starting to find a bid too. We start to work our way back above 30,000. But for now, we'll have to wait and see. I mean, Bitcoin could just easily as hold below here. Europe rolls over, the US rolls over, and it gets smashed again. And then, okay, once we start getting through these lows, I would expect to see some carnage. All right, what we'll do, we'll leave it there. Hopefully you enjoyed that, and thank you very much for joining me. If you listened to the whole thing, and if you did, it'd be great if you can leave us a like, subscribe to our YouTube channel, and remember to take a look at the website at www.tradethestructure.com. Okay, there's some free material in there. Subscribe for free, and you get more educational material. Now, I'll keep pumping out these reports. Hopefully they help you out and get you on the right track and just get you looking at the right levels. All right, thank you very much for joining me, guys, and we'll speak to you soon. Have a great weekend.